and welcome back to the Financial Podcast. I'm Olivia, and today we're diving into some significant news from the world of government contracting and consulting, specifically looking at Booz Allen Hamilton. The company recently made a notable announcement that has certainly caught the market's attention. Booz Allen Hamilton, the McLean, Virginia-based Fortune 500 management consulting firm that primarily works with the U.S. government, announced plans to reduce its workforce. According to their chairman, CEO, and president, Horacio Rozanski, the company will be laying off 7% of its employees. With a workforce of approximately 35,800 employees as of late March, that translates to about 2,500 people losing their jobs. These layoffs are planned to occur relatively soon, specifically during the company's first fiscal quarter, which concludes at the end of June. The impact is expected to be heavily concentrated within a specific part of their business, the civil division. This division provides technology and consulting services to civilian government agencies. While the exact number of affected employees in Virginia, where the company is based, wasn't specified, some leaders within the civil sector are located in Northern Virginia. So, why is this happening? Booz Allen pointed to several factors contributing to this decision. A key reason cited is a slowdown in federal spending and procurement, particularly within the civil sector. The company's CEO noted a recent, quote, slowdown in the civil procurement and spending environment. This environment has been challenging, with a government-wide reassessment of spending underway. The company's chief operating officer and executive vice president, Christina Martin Anderson, mentioned that agencies and departments have been reviewing their portfolios with spending targets in mind. Adding to the pressure on the civil division, 5 of Booz Allen's major civil technology contracts experienced reduced run rates in April. Furthermore, a significant technology contract with the Department of Veterans Affairs, or VA, concluded at the end of the last fiscal year 2025. The loss of this VA contract combined with the reduced run rates on the other 5 contracts are expected to negatively impact the company's consolidated top-line revenue. Horacio Rozanski also connected the slowdown to broader governmental shifts, specifically mentioning the period after President Donald Trump took office. He noted that federal procurement, quote, slowed down significantly initially because many sub-cabinet level positions hadn't been filled, and people were waiting for specific agendas to become clear. He suggested that as those agendas begin to be flushed out, they expect to see growth in the latter half of 2025. However, in the immediate term, these factors necessitate adjustments. Against this backdrop of reduced spending and contract changes, let's look at Booz Allen's recent financial performance. The company reported its results for the fourth quarter and the full fiscal year. For the full fiscal year 2025, Booz Allen's total revenue was quite strong, showing a 12.4% increase year over year, reaching $12 billion. The civil division also saw revenue growth for the full year, reaching $4.17 billion in fiscal year 2025, up from $3.83 billion in fiscal year 2024. Looking specifically at the fourth quarter of fiscal year 2025, the company reported revenue of $2.97 billion, which represented a 7.3% increase compared to the same period last year. The organic revenue growth for the quarter was 6.2%. On the earnings front, the company performed well in the fourth quarter, reporting adjusted diluted earnings per share, or EPS, of $1.61. This figure surpassed some analyst estimates, which were around $1.59 or $1.36, depending on the source. Booz Allen has a history of exceeding consensus EPS estimates, having done so 3 times in the past 4 quarters. The net income for the fourth quarter was also significantly higher than the previous year, increasing 50.8% to $193 million. For the full fiscal year, net income was $935 million, up 54.3% from the prior year. So the recent results for fiscal 2025 showed overall growth, including in the civil division over the full year. However, if we look just at the first 3 months of 2025, civil revenue was slightly down at $989 million compared to $992 million in the same quarter of 2024. This recent dip, coupled with the anticipated impacts of contract changes, paints a less optimistic near-term picture for the civil segment. The factor that seemed to most significantly impact the market reaction was the company's financial outlook for the upcoming fiscal year, 2026. Booz Allen provided projections for fiscal 2026, anticipating adjusted EPS to be between $6.20 and $6.55. They also projected revenue for fiscal 2026 to fall within the range of $12 billion to $12.5 billion. However, these projections landed below what analysts had been expecting. Analyst forecasts were generally higher, anticipating adjusted EPS around $6.92 and revenue closer to $12.82 billion. This gap between the company's projections and analyst expectations was a key driver of the negative market reaction. Booz Allen themselves anticipate that the loss of the VA contract and the reduced run rates on other contracts will lead to a 6% decline in their consolidated top-line revenue in fiscal 2026. Furthermore, they specifically forecast that their civil business will see a revenue decline in the low double digits in fiscal 2026. This anticipated decline in the civil sector is a direct result of the factors we discussed, the changes in government spending and specific contracts. In response to these anticipated challenges, particularly in the civil sector, the company plans to restructure its civil business. This restructuring involves implementing cost reductions and, as we've seen, layoffs, aimed at matching anticipated demand in this segment. Despite the headwinds in the civil division, Booz Allen's leadership expressed confidence in other areas of the business. They anticipate growth in their defense and intelligence segments. The company recently secured notable contracts, including 3 from the National Geospatial Intelligence Agency and the Air Force, collectively valued at $1.2 billion. Their qualified pipeline for fiscal 2026 stands at $53.4 billion, which is a decrease from fiscal 2024, but still higher than the pipeline in fiscal 2024. Booz Allen also highlighted their strategic focus areas, particularly their VOLT initiative, which emphasizes leveraging AI and advanced technology to support government priorities. The CEO, Horacio Rosansky, stated that they're using their positions in AI and the advanced technology ecosystem to accelerate the administration's priorities. They believe their technology solutions are effective and will contribute to growth in the second half of 2025 as procurement agendas become clearer. Furthermore, they anticipate that their civil business will eventually rebound as major transformation and efficiency initiatives for their civil customers begin to take shape. Recently, the company also announced the hiring of Todd Signetti as Vice President of Technical Product Management. Signetti, who previously worked at Amazon Web Services, brings experience in product roadmap development, cloud transition operations, and cybersecurity. This hire seems aligned with the company's strategic focus on technology and cloud-based operations. From a broader financial health perspective, the sources mention some key metrics for Booz Allen. The company has a PE ratio of 16.4 and a price-to-sales ratio of 1.20, reflecting market valuation. Its debt-to-equity ratio is 2.97, indicating financial leverage, and its current ratio is 1.57, suggesting its ability to cover short-term liabilities. They also reported a record backlog of $37 billion and a strong trailing 12-month book-to-bill ratio of 1.39x, which points to future revenue potential. In fiscal 2025, they also engaged in significant share repurchases, buying back 4.3% of outstanding shares as part of a $1.2 billion capital deployment strategy. Adjusted EBITDA for Q4 was $316 million, up 10.5%, with a margin of 10.6%, and for FY25 was $1,315 million, up 11.9%, with a margin of 11.0%. However, the market's reaction to the outlook and layoff announcement was significant. Following the news, Booz Allen's stock price plummeted. Shares were down more than 12% in pre-market trading and plunged nearly 15% in Friday afternoon trading. This sharp decline occurred despite the stock having been roughly flat since the start of the year before the announcement. The consulting industry, particularly for firms heavily reliant on federal contracts like Booz Allen, remains vulnerable to shifts in government spending priorities. This reliance means that adjustments in federal contracts can have a direct impact on a company's revenue and workforce. There are varying perspectives on companies heavily involved in government contracting. While many employees are simply trying to do their jobs and pay their bills, the nature of the work some firms undertake can be controversial. Booz Allen, for instance, has been associated with past projects related to surveillance systems and has been noted as the employer of Edward Snowden when he leaked NSA information. The company's involvement in areas like managing the National Park System reservation fees has also drawn comment. Some perspectives suggest the company has faced challenges with employee experiences, such as project matching, potential underpayment or overwork, and the uncertainty tied to contract work. The consulting model, where employment can be tied directly to specific, sometimes short term contracts, inherently carries a degree of instability. Overall, Booz Allen Hamilton finds itself navigating a complex environment. While its overall financial performance in fiscal 2025 showed growth and key metrics like backlog remained strong, the challenges in the civil sector, driven by changes in government spending, have necessitated significant workforce reductions and led to a cautious outlook for fiscal 2026. The company is banking on growth in its defense and intelligence segments and a future rebound in civil as transformation initiatives progress alongside its strategic focus on advanced technology like AI. The market reaction underscores the sensitivity of these firms to shifts in their primary customer base, the U.S. government. That wraps up our look at Booz Allen Hamilton's recent announcements. It's certainly a situation to keep an eye on as they implement these changes and work towards their fiscal 2026 goals. Thank you for tuning into the Financial Podcast. If you found this information helpful, please consider liking and subscribing. We'll continue to bring you updates on the financial world. Until next time, take care.